Hello, it is the 1st of August 2012. Let's take a look at the charts for silver, starting within the daily chart. As Wednesday had a significantly sized red candle down a little over 2% for the day after it tried to break out of this and reverse this long downtrend that's been in place since the end of February. And we still don't know yet if this is going to be the bottom, as bottoms are known sometimes well after the fact. This will be one of those times. The Fibonacci lines are from the February 29th high of 3750, and it's still a long ways away from getting by this. And it's just breaking that to end the bearish trend. It needs to break and hold above this to make that move part of a failed move. Okay, so with that being stated, let's take a look at this on the 10-hour time frame. It was the 9, and now it's going to be the 10. And probably later it'll be the 11 and then the 12, just so I have this top on the left-hand part of the chart, which works within this low. Because since that point, it has spent maybe a few seconds or moments above the Fibonacci level of 2841, and it has spent several of the time below that of 2752. Things are staying bearish on this short-term level, but I've been waiting now for what seems like months for this thing to break down. It hasn't as of yet. That doesn't mean it won't, but it does mean each day that I'm not going to be believing that it's going to occur, although I know if there's a 35% margin hike or anything like that, it could very easily take place. But as of now, it's been a bunch of nonsense moving markets. The selling today, again, we're finding resistance at this level rather than support. If that continues to go further, definitely a break below 27, then I think we'd have yet another test of the lower 26 level. We've had a lot of tests, and I like to say the more often you test it, the more likely it is that you take it out, but it's been such a sideways mess, it's very difficult to say if that's going to take place or not. Now, today's selling, or this big red candle, occurred fairly fast. I'm going to show this to you on the 1-minute time frame today. This is what occurred at 12:42 GMT. That's I think London, the place of the Olympics anyway, and which would mean it was 8:42 Eastern time in the morning and 5:42 in California. But this here, 2 minutes, and the price goes down about 50 cents. And it looks like the moves beforehand, it was just like a whole bunch of nothing was going on. And in comparison, a whole bunch of nothing was going on. But that's because when you have big moves, it makes all the other stuff shrink in comparison, and this was one of those examples. You can still see the 18 average, how it played out. It went below it, it tried to get above, above, below. It resisted it on 2 occasions, actually like 3, and then plummet. A decent sized move, but big at the time, as it went from like 2790 down to like under 70, a move of almost 1% in just under a couple minutes. And then you had this long sideways consolidation for about 15, 16 minutes. And then down moves comes in a short period of time. In fact, when you look at this, the 11 of the last 36 days have had days with movements that were not larger than 50 cents, with the smallest being 31 cents on the 15th of June. The final 2 candles on this chart had lost 53 cents in a time duration between 2 and 120 seconds. Now, why would it be between those 2 levels? Well, it can't be more than 120 because each one is capped at 60 seconds apiece. But I don't know what time this thing would have started at. Was it with 7 seconds remaining and 20 seconds remaining? And then how long did it take within this period to get down towards here? So therefore, it could have been 5, 6, 7, 8 seconds to lose that kind of amount. But quite frankly, this is still small moves compared to what's most likely on the horizon for both up and down moves. as the this thing gets really, really big, basically. And we're going to finally take a look at this by looking at some archive charts. The link in the more information box has a directory for these charts. And on one of the folders, you'll see one that states historical data. Well, there's 6 of them in there. And I'm going to probably show them over the next 6 shows or 6 videos. And this is the 10-hour time frame within the 2010 bull market. Basically, bull markets is where you are trading above this 18 average band. The 18 average band is in an upwards trend base, so something like that. Just by drawing this upward trend base, we can see that the rate of ascent changed. But with that being said, this was how the bull market started in 2010. Now this 10-hour time frame, this is about 23 hours or so in a day for the silver market to trade. Therefore, this is a little under a half a day. So if this is 100 total, you're looking at about 40 some odd days where the price went from 17 to 25, which was a gain of, at this stage, about 40%. Where if we were to gain 40%, say, from here, that would be about, what, 35, 38? And that was nothing compared to what occurred afterwards anyway. So what I want to get at is that's what a bull market looks like. There's several different ways bull markets can trade within. That was just a pattern of consistently going towards the upside. And I'm going to end this video at that. So thank you for tuning in and have yourself a great day. Bye-bye.